What's up everyone, Brad here with the Money Dad channel. In this video I'm going to be going over a list of stocks that I cover on this channel. You can see them all here on the right side of the screen right here, because I've had a couple of channel members asking me to go over some of these stocks and there's not quite enough there for a full video update on each individual stock, so I thought I would just do kind of a combined video on all of them. So if you're looking for a particular stock that I had listed in the thumbnail, then look down at the timeline of the video and you should see chapters, and you can just fast forward to whichever stock you're looking for. But I do encourage you to watch the entire video because I have analysis on all of these stocks and I think you can get something out of all of them. Okay, now with all that said, I am not a financial advisor. Please do not make any trades on these stocks based solely on the information that you see in this video. Do your own research, do your own due diligence. This is just for entertainment purposes. This is my opinion. I do make these trades with my own money, but I'm not a financial advisor, so I cannot be telling you to, make these trades with your money. Okay, now that we've got that out of the way, again, this is going to be kind of like, if you've ever seen Jim Cramer's show, he does that lightning round thing towards the end of his show, where he goes over a stock in 5 seconds and then moves on to the next one. This isn't going to be quite 5 seconds on each stock. I am going to provide a little bit more technical analysis than 5 seconds worth, but I am going to try to knock out all of these stocks in a relatively short amount of time. And by the way, I will not be going over NEO or Safe Bulkers in this video, even though they're on this list, just because I've just made recent videos on them. So if you want to check out the information that I've put out on these two stocks, I will link those videos above and you can just click on that. Or you could just go over to my channel and find the one that says NEO or Safe Bulkers on the thumbnail. Okay. Alright, so let's jump into the first one, ASRT. We were tracking a bull flag on ASRT for a little while. That was the pattern that I put out in the video that I made on it. The thing with ASRT is this bull flag is starting to get a little long, and we've already broken down underneath the support of the bull flag 3 times now, so it's not nearly as good looking as it was when I made that video. Okay, now all that said, if we started heading up higher into this bull flag and then broke out above, I would still consider that a valid pattern and a breakout above this blue line. But the longer this bull flag gets, the less chance there is that we're going to see this actually play out like a bull flag. So it's not looking terribly great here for ASRT. The big thing though is they have this earnings report coming up on March 11th, which is the end of this week, and I don't like to hold trades through an earnings report. So if I were trading right now ASRT, I would make sure that I was out before this earnings report. But if you're long ASRT for the long term, then you just hold through these waves and the earnings calls and you hope for the best. So long story short, on ASRT, I'm still tracking this channel that we have made from this bull flag. I think we could still bounce off of this support right here and head up to the top of the bull flag, but we need to do it very soon or else this bull flag is going to start to become invalid because it's just starting to get too long. Okay, let's move on to Cleanspark, CLSK. So I've got the pattern that we drew out on Cleanspark. I also have the Fibonacci ratios on this chart as well, just because this is one of those charts where Fibonacci looked really good. It kind of worked out on this chart. So you see this blue line chopping up through the fib levels. That is our bull flag. Still tracking that, but over the last few days we did break down underneath it. So we need to get back up into it basically tomorrow, or I'm going to consider that a breakdown under the bull flag, and it may be invalid at that point. But let's look at the Fibonacci ratios here. Look, since the all-time high on January 8th, we retraced down to this Fibonacci ratio right here, and it acted as really good support, right? So this level right here has acted as pretty good support in the past. We came up, chopped around through this level right here, came back down, it acted as support again, bounced off of it, and then we cut through it. So now we are in the middle of this Fibonacci range right here, in between, it looks like the 38 and the 50% ratios. So I'm really curious to see, is this one going to act as support like we saw in the past with the 38 right here? Or are we going to cut through it? If if we continue to head lower. And on the upside, is this 38 now going to act as strong resistance because it acted as strong support in the past? So we're kind of in this no man's land right in between these two Fibonacci ratio levels. The 38% is around that $25 range, and then the 50% is around that $20 range. So we're kind of in the middle of those right now, but I do see those as possibly strong support and resistance. It looks like this level above us is going to be strong resistance because it was strong support in the past. I'm curious to see if this $20 range is going to act as strong support if we head lower. All of that said, on Cleanspark, I am a long-term believer in this company. I do like the company. I like the financials. I like the business model. They are tied to the price of Bitcoin pretty strongly now that they are a Bitcoin miner company. They weren't when I got into them. They were just a microgrid, clean energy type company, but they did add Bitcoin mining to the business model, which I also enjoy. So all good things there for Cleanspark for the long term, in my opinion. But looking at these Fibonacci ratios, that just gives us kind of a short term idea of where support and resistance could be. All right, let's move on to Fuelcell. Fuelcell, I also have the Fibonacci ratios measured out here on the chart, and we're kind of in between a couple of levels, but that's not the big story here on Fuelcell. Fuelcell has what looks like a head and shoulders forming right here. You got this shoulder, head, shoulder. We've broken below the neckline. What I think is going to happen, if it continues to play out like a true head and shoulders, we're going to come up, test this neckline right here, which looks like it's going to be in that almost $16 range, maybe like $15.50 to $15.80, and then we're going to head lower from there. Measure the neckline up to the head, you get $13.44. So you would take your neckline and drop $13.44 from there, and that is a ton of money. I mean, we're talking about dropping all the way down into that $2 range. So you really hope that that kind of move doesn't happen. That is an absolutely insane move. I would be pretty shocked if a move that strong happened, but that is the head and shoulders that we see on the chart. It does seem to be pretty extreme, and a move that extreme would have us just slicing right through these Fibonacci ratios right here and right here. So I think that's a little too extreme to play out completely. So I would be looking more at this Fibonacci ratio right here to test as support in that $11.30 range, and then we have overhead resistance at that 14.75-ish range as well. So like the chart before us, we're kind of in no man's land in between these two Fibonacci ratio levels, and we want to see which one we're going to head towards and if it's going to act as support or resistance. If we slice right through this this resistance at that 14.50 to 14.80 range, if we just slice on right through it, I would be a buyer here, because I think that would be a bullish sign, and I think we would be heading up to the next Fibonacci range of that $18 range. Okay. All right, that's what I got for Fuelcell. Let's move on to Gevo. So with Gevo, we have a nice gap fill here recently, right? So back in January, mid-January, we gapped up, leaving this big old hole on the chart right here. And we continued to head higher from there, but eventually we came back down to fill that gap. So we just filled that gap maybe 3 trading days ago with this candlestick right here. So now that we've come down and filled that gap, I do think we're probably going to head higher from here. So the Gevo chart looks pretty good. I would just mention that we have this earnings call on Gevo on March 17th. So if you are a trader, be aware of that. You may not want to be holding trades through that date. If you are a long-term investor, then you don't worry about it. All right, moving on. Like I said in the beginning of the video, I'm not going to do NEO because I just put out a video recently on NEO, so I will link the video to that one above or below in the description. Let's move on to Plug Power. Okay, so Plug Power I think is a pretty similar chart to Fuelcell. I think they both kind of move almost hand in hand, but I am tracking a couple of different patterns on these charts. So drilling down into the 15-minute candlesticks here on Plug Power, I've got what looks like a head and shoulders, or I'm sorry, an inverse head and shoulders, which is bullish, and it's going to be very short-term bullish because these candlesticks are 15 minutes each. And basically how this is going to play out, if it does play out, is you got your shoulder here, your head, another shoulder, you break above the neckline, you come back, retest the neckline, which it is doing right now, and then you curl up and head up. Just like I was showing kind of the opposite on Fuelcell, but this one is not going to be nearly as extreme as the one on Fuelcell because it's just not as big of a pattern. So let's clear off these squigglies so I can give you a more accurate reading. Let's measure out the head of this head and shoulders up to the neckline. You get about $7.20. So you add $7.20 to wherever you think you're going to break out from this neckline. Let's say it's right here. Let's add $7.20, and you get roughly $45 on this chart as the upside target. Okay, so that's what I'm seeing for Plug Power in the very short-term future, like this week, something like that. You know, I think we could get up into that $45 range, but from there, I don't know if I'm going to be bullish or bearish on this one, just because this entire industry seems to be kind of moving to the downside lately. The whole, you know, green energy, electric vehicle type movement. So it's kind of hard to see, you know, are we having a major move from those kinds of stocks into more traditional type stocks, or is this just kind of a bump in the road? So I do think we're going to head up to $45 on Plug Power, and then I'll have to reassess from there where I think this industry is going to go and where, you know, Plug Power is going to kind of be pulled with it. All right, let's move along now. Safe bulkers, like I said in the beginning of the video, I'm not going to review this one just because I made a video on this stock yesterday. I will link that one above right now. Let's move on to Senseonics. Okay, so I've got the Fibonacci ratios on Senseonics. I've also got some gaps pointed out on this chart. The gaps are lower. They are much lower than we are now. And they're pretty recent, so that's not a good look for Senseonics. Okay, the more recent the gap is, the more relevant it is, in my opinion. And these ones are from middle of January and middle towards end of December, so not a good look for the Senseonics chart. This one all the way down here, I would be pretty shocked if we got all the way down there and filled it, to be honest, just because it's kind of in no man's land. There's no Fibonacci ratio down there, but this one right here kind of starts right at that 78% Fibonacci ratio, so that one almost kind of makes sense that we would head down there and fill it. Now the thing is, the gap starts at the ratio, it doesn't end at the ratio, so we would need to see a failure of this as support to come all the way down to fill this gap. So that's really interesting. So I don't know that that's going to happen, but you know, obviously if we do, then we would be looking at a serious loss in stock price. To fill that gap, we would have to get all the way down to that $1.21 range. Not saying that's going to happen, but it's something to keep an eye on. There is a gap down there. It's possible that this stock may need to retrace to fill that gap. Okay, so again, not the best looking chart. I'm not saying that, you know, we're definitely heading down to $1.21, but it is something that I'm keeping my eye on in the very short term. Though this Fibonacci level right here at $2.34 would be our next level of support. It looks like it did act as support back here. So $2.34 is what I'm looking for to act as support. If we break below that, then I do think we're probably going to head down to that $1.50 range and then maybe even try to fill that gap. So really need to see $2.34 act as support if we head down from here. You know, if we keep heading higher from here, then all good things, but and then we don't have to worry about that support, right? All right, let's keep moving along. SOS. So this one is a Bitcoin play. They are a Bitcoin miner out of China. So like with our other Bitcoin play in Cleanspark, they are going to be tied somewhat to the price of Bitcoin. Now this one got hit hard today, 15%, and Bitcoin actually had a pretty good weekend, so it doesn't really make a whole lot of sense there, other than this one seems to be getting manipulated by bad press, bad short sellers out there creating these fake lawsuits and fake claims saying that this is fraudulent. So that seems to be driving the price of the stock down. Now, all that said, most of that stuff that we see out there is going to be fake. That's just short sellers trying to make money off of bad press. So that should be a short-term loss on this stock, and then we should head higher from there. Again, all that said, this is going to be tied to the price of Bitcoin. So if Bitcoin goes up, this stock should go up. If Bitcoin goes down, this stock should go down, etc. I am tracking this wedge pattern on this chart, which is bullish because this is a continuation pattern of whatever trend was happening before this pattern, and the trend before it was up. Right, it was a bullish trend going into the pattern, so we are supposed to continue that trend when we break out of it. It doesn't happen every time, but if you had to bet which way this was going to break out, you would think it's going to break out in the same direction as before the pattern, which is up. So still curling up right now. Volume is descending despite some pretty big volume sticks last week. So as we get closer to the end of this wedge, it'll be really interesting. We'll need to pay attention to which way this wants to break out. If it breaks out above this blue line, then I'd be a buyer and I'd be targeting significantly higher prices. If it breaks down under this blue line, I would not want to be in this stock, as it will probably start to break down even further. Okay, let's move along to Tesla. So if you are a channel member, then you probably saw I was posting YouTube community posts about Tesla today. I was keeping my eye on it because of this Fibonacci level right here. We were chopping around this this Fibonacci range right here all day. Actually, let's just bounce into like the 1 hour candlestick so we can see what was going on. We started our day right here and we started trending lower, kind of hit that Fibonacci range, acted as support for 1-2 candlesticks, and then we broke down underneath it. So not a good look for Tesla going forward. That Fibonacci range looks like it's breaking down. We'll need to see, where we open tomorrow, see if we open above that Fibonacci range or below it. I think if we open below it, that is a really bad look for Tesla, and we could be heading much further down, maybe into that $470 range for the next Fibonacci ratio level. That would be absolutely terrible for this stock. But we need to see where we're going to open, right? If we can get back above that 570 range, that would look really good for the stock. If we can continue to hold 570 as support, maybe we can use that as our floor to continue our trek higher to that next Fibonacci range, which is in that $700 range. So this is a key area that I'm watching. We're currently underneath it, which is not good. By the time I get this video posted, we'll probably already have another candlestick forming, and you guys will already know which side of this line we were on. So, all right, let's move on to a stock that I have not covered before on this channel, but a lot of people have asked me to cover it. That is UAMY. I think actually I covered this in a live stream, but I haven't posted a video on it. So let's take a look at this one. We have, the first thing I notice is there's this big gap right here on this chart, or there was a big gap right here around the beginning of February. We gapped up, kind of chopped sideways, and then we came down and filled the gap. So it's really nice to see that that gap has been filled by this candlestick. We did continue to chop down further, and we have, kind of confirmed that gap coverage with a couple more candlesticks. So that is a good look for this stock. We could start to head higher from here now that that gap is filled. Let's pull back a little bit further on this chart, see what we have to look at here, see if there's anything going on back here. Oh, I do have a line drawn down here, so I definitely was looking at this chart during like maybe a live stream or something like that. Looks like I was trying to connect a floor back here. So there was not a ton of volume on this stock until very recently. You can see this volume profile down here just went parabolic recently. looks like you kind of have this almost like cup type formation over the last 5-6 years forming. All right, let's zoom back into the current price action. Now that we have that kind of context, it does look like a pretty good stock chart from a very long-term perspective, as you got this curl up is occurring that's almost creating you know, the second half of a cup and handle. Maybe not quite a cup and handle, but it is still a good look. You've got this big explosion of upward activity on really big volume, and then as you start to consolidate some of those gains, the volume starts to taper off. You are oversold on the RSI, so that's a good sign that suggests we're going to start heading up again soon, potentially. You know, the volume has died off. It's starting to prepare for another big move soon. So it's a good looking chart. It is a true penny stock, if I'm not mistaken. I mean, it's trading in that $1 range. It is a $113 million market cap, so very small company, but good looking chart in my opinion. We are starting to get a little long on this consolidation, but it was needed to come down here and fill this gap. If this one candlestick didn't fill that, if that wasn't enough to get all of the market makers out of their trades that didn't hit during this gap, then we have this this pullback right here to kind of fill that gap again to get all those market makers out of those trades. So like I said, it's a good looking chart. This floor down here is trending up. That's a good look. We have gone parabolic recently, so you could start to see a retracement, but overall the trend over the recent and long term has been up. So I like this chart here. I don't have a specific trade to make on it, but if you're long on this stock and you're just looking for maybe another perspective, in my opinion, over the long term, this stock looks good. Nothing to worry about here, in my opinion. You are going to have to deal with some pretty serious swings in price because this is a small, this is a micro cap penny stock. There's going to be big swings in prices, but it does look like the overall trend is up. Okay, let's move on to the last one, Zomedica. So on Zomedica, there are two big things that I'm tracking on this chart. One is this gap that is much lower on this stock. That's not a good thing. I do have some good news on this stock, but the bad news is this gap is down here in between this 50 cent to 63 cent range. It's just not a good look. It's kind of this looming fear that I'm always going to have. Is this stock going to retrace all the way down here to fill this gap? We hope not. But it's something to keep an eye on. Now the good news here is we have this wedge pattern forming coming off of a very serious bull run. So a wedge pattern, like I was saying earlier in the video, you typically see it break to the direction that was happening before the pattern, right? A wedge pattern is a continuation pattern. It continues whatever was happening before the wedge pattern, right? And what did we have before? We had a major bull trend. So we have this wedge pattern, and it suggests more often than not we will continue that direction. So that bull trend should continue. It's not going to happen every time. Nothing in the stock market is 100%, but this is a probability play, and you have a higher probability that this wedge pattern will break to the upside than the downside. Now, all that said, we have to pay attention to these blue lines right here very carefully. If we break above this blue line right here, that would be our entry point, and we are targeting much higher prices from there. If we break below this blue line, that is a breakdown under this pattern, and then I would think that we're going to head much lower, maybe even to fill this gap. So we really want to see this blue line hold as support, as our floor. If we break under that, I want nothing to do with this stock because I think it's going to head much lower. All right. So that is what I've got for Zomedica, and I think that is going to be it for this video, guys. If you enjoyed it, hit that like button. If you are not a subscriber, hit the subscribe button. Maybe even consider joining the channel. Hit that join button. It's $2.99 a month. I provide you with all of my trades in near real time via YouTube community posts, my buys, my sells, what I'm thinking, what I'm considering getting into, things like that. You'll also see my live streams after they've been live. I post them on YouTube only for members only. I do that because it kind of messes with the algorithm. I can't post them for everybody to see, so I just post them for members only. So if you want access to those prior live streams, please consider joining the channel. It helps me out, helps my channel out, helps my family out. Really appreciate everybody that has already joined and become a member. Thank you all so much. That's all I've got. I will see you in the comments below and in the next video. Thanks, guys.